Another Friday relief rally off a third consecutive red week driven lower by tariffs. Happy Pi Day! It's Friday and another weekly market recap. For the third week in a row, markets fell on tariffs, but ended on an optimistic rebound heading into the weekend. So let's review. We opened the week Monday sharply lower, down almost 3% after the White House failed to rule out the US falling into a recession over the weekend. Investors were hoping the White House would shift its aggressive policymaking if the economy started to falter. Markets fell more on Tuesday with, what else? More tariff drama after a retaliatory tariff tiff with Canada on the new steel and aluminum tariffs. Then Wednesday, the February CPI came in better than expected. Finally seeing some good news, markets rallied up 0.5% ahead of more inflation data coming the next day. Then Thursday's producer inflation was also a winner. However, it was overshadowed with more tariff drama, with this time the EU retaliating, and of course the White House threatens more in return. The S&P tumbles lower Thursday yet again and officially entered into market correction territory. So today, Friday, a government shutdown at midnight looms as the Senate votes on an extension bill. The Senate Minority Leader signaled that he'd vote yes, leading markets to expect the government funding bill to pass and avoid a shutdown. Optimism sparks another end-of-week rally, with markets sharply rebounding over 2% today. Even with today's rebound, markets are still solidly red for the third consecutive week. As we mentioned yesterday, the White House has shown no indication of backing off its aggressive tariff plans, which likely keeps the macro instability and trade war fears elevated near term. Also, lost in the market euphoria today, consumer sentiment data continues to deteriorate more than expected. So what's on tap for next week? Well, the next Fed meeting will conclude on Wednesday. No one's expecting any rate changes next week, but focus will be on the Fed's outlook, especially given all the tariff and policy changes since the last meeting in January. Amid all the uncertainty, rate cut expectations have been on the rise. Markets will be looking for signal from the Fed that they feel the same way. So basically, expect more volatility again next week, especially since more tariff news is also essentially a given. Anyways, enjoy the weekend, and we'll see how the next week shapes up.